Good morning, everybody. Thank you very much for joining us for our very first series or first part of our series of webinars for Life Insurance Awareness Month. My name is Matt Alina, and I'm one of the marketers here at URL Insurance Group. And we have a bunch of training and sales ideas for you for the entire month of September. And we're very fortunate to have our partners, North American company, to join us to kick off the Life Insurance Awareness Month series of webinars. If any of you are fairly new to the life insurance marketplace, or maybe you've been doing this for quite a while, you have to understand that what you do is extremely important. Selling life insurance, some people roll their eyes at it and they poo-poo what we do. But really what we do is we're helping families pay off medical bills. We're helping families pay off mortgages. We're helping replace lost income. We're helping families pay for their children to go off to college in the event of someone's death. And we also help provide smooth transitions of family businesses to the next generation. And there are so many other things that a life insurance policy does, and so many functions of a life insurance policy, that when you file your first death claim for your clients, you actually get to see your work come full circle. And we all remember when we file our very first death claim, we remember that experience, and we also have a story to tell. When you work with URL Insurance Group, you have an entire team that is dedicated to helping you be successful. From marketing, you have myself, you have Steve Clemens, Joey Fry. We're here to help you with sales proposals, underwriting risk assessments, helping you with any marketing ideas, providing you marketing materials, whatever we can do to help you get in front of more people and to sell more life insurance. At the same time, your case managers are dedicated to helping you get those applications in and placed as quickly as possible. You have Rosemary Evans. She handles agents with last names beginning A through L. And we have Rachel Cook, who handles agents with last names M through Z. You can learn more about us at our website, urlinsgroup.com. Our toll-free number is 800-926-8875. That's 1-800-WANT-URL. For those of you that are not familiar with URL, we are a full-service national one-stop brokerage, and we believe that the insurance business in general is all about people. People who want to provide their customers with the best products and services that are out there, as well as people who have the peace of mind knowing that they have quality insurance. We're in the people business, and we've been doing this since 1986. We started off by just offering life insurance, and it has expanded to so many different opportunities in other areas within the industry. We provide and specialize in annuity solutions, employee benefits, life insurance, health plan options, which is individual and group health insurance, Medicare offerings, and ancillary products like disability, critical illness, and so many other different areas. If it's something that we can do, if it's a product or a service that we can offer, you're going to find it here at URL. You can learn more about us at urlinsgroup.com. If you would like to have temporary access to our website, feel free to use the username of Future and the temporary password of Partner at urlinsgroup.com, and you can see where you can get forms, you can get marketing materials, quotes, and a whole lot more there. And it's right at your fingertips, available to you 24 hours a day, 7 days a week. Here's a list of our partner life carriers, and you'll see that North American is highlighted because we're going to be focusing on some great ways to market to your clients through North American's programs on performing a client or policy review. Now, our mission during Life Insurance Awareness Month of 2017 is to help provide you with the tools, the resources, and a fresh new approach to sharing the importance of life insurance. So throughout the next 5 to 6 weeks, be on the lookout for emails with shareable consumer-friendly materials, marketing pieces, social media materials that you can put on Facebook and Twitter and those other social media outlets. We're going to be doing web training like you're experiencing right now, and we'll also be sharing some different sales trips throughout the next 5 to 6 weeks. Also, even though September is Life Insurance Awareness Month, these materials that we're going to make available to you all throughout the year. So you'll have this stuff available to you on our website all year long, and we'll also help you with obtaining some of that materials to get in front of more people. So Life Insurance Awareness Month is brought to you by a nonprofit organization called Life Happens. And every year they have a spokesperson, and this year's spokesperson is Danica Patrick. So you'll see some materials that'll be coming through emails and through our Facebook page that's basically going to be stuff that you can share with your clients through your own Facebook page, whether it's your agencies or your own personal Facebook page. The idea is to help share the importance of life insurance, and it's also to help drive some more traffic, start a conversation with your client. As an example, this is a shareable fact. This came from the 2017 Insurance Barometer study through Life Happens in LIMRA. 2 in 3 adults think life insurance is too expensive, but most overestimate its true cost by more than 3 times. This is stuff that you can put on Facebook and say, hey, give me a call if you want to find out how much your life insurance will cost. So these are different things that you will see throughout the next few weeks as we promote Life Insurance Awareness Month, and we help share and spread the importance of life insurance. So without further ado, I would like to welcome Kim Grund and Steve Zimmerman from North American Company, as they're going to be showing us how to perform a client and policy review. Good morning, Steve and Kim. Thank you very much for joining us. I'm going to give you control here, Steve, and you can take it away.
Hey, great. Hey, thank you, Matt. What a wonderful way to kick off the call and introduction. I think that was extremely well said. So good morning, everybody. My name is Steve Zimmerman, and I am thrilled to be able to spend a little bit of your morning with you. Kim Grund is on the line with me. We are 2 of your dedicated resources at North American Company, working with URL. So you can really just view us as an extension of the URL team. So I would really compliment you for being here, and we're going to try to just spend a little bit of time and maybe give you a little context on the client review, the policy review, and maybe just a little bit of information of kind of the big picture of how life insurance is fitting into conversations that you can advance your client relationships as well. So we are scheduled for about an hour. I don't think this is going to take an hour. But we will get through the topics. We're going to talk briefly for a couple of minutes about just the overall positioning of life insurance. We'll talk about client and policy reviews. We'll share a couple of specific examples to reinforce what you may be running into as examples. And then we're going to end with some very specific action steps on how, if you're interested to incorporate this into your practice, we can give you some steps to do it, and we'll outline resources to help you get there. So before we jump in, I just want to, as a matter of brief introductions, as I had mentioned, Kim Grund is on the line. Kim works out of our home office in Fargo. I am based in Connecticut as the local field person. Between Kim and I, we've got decades of experience. I've been in the business doing what you do. Probably I'm a company rep, so I'm probably more a better wholesaler than I was an advisor like the people on the call. But I have done a lot of these. I've seen them firsthand. So, this is an open offer from Matt, Joey, Kim, and myself, that if you're interested with this content, just come back to us and we'll help you every step of the way to incorporate this. So what we're going to do this morning is we're going to take a look at policy reviews. And I would just pause for a moment, and I just want to invite Kim, Matt, and Matt, I'm not sure if Joey or anybody else is in the room, but, we'll keep this call moving. But if any of you want to make a comment along the way, I would encourage it too.
Sounds good.
I'm assuming that the people on the call have some experience with selling life insurance, but maybe it's not the core part of your business. So the purpose of our call is going to be to help you expand your confidence and competence incorporating life insurance solutions into your client interactions. If life insurance is a real core pillar of your practice, we may not be exposing you or teaching you things that you haven't seen before, but we may be saying things in a new way that you may like to, you may like just how we're presenting some things. So our goal is kind of big picture and a how-to process. So to start out with client review, I would view this client and policy review process as a way to strengthen and go deeper with client relationships. It's not just about trying to sell a policy. It truly is about an opportunity to talk with your clients. I mean, you may have other parts of the business you're involved in. You may be a property and casualty producer. You may be a health agent. You may be a planner that does investment or assets under management business. If we can help you with these conversations with clients and prospects, we're going to put you in a place to go deeper about what matters to them, where their other assets are, do they have other policies. It's also an exploratory process for you to build a bridge to the next generation and really talk about what matters to them. So the process we're going to have, if, say, for example, if we talk to 10 clients, we might sell a new policy 4 or 5 times out of 10. But 10 out of 10 times, we're going to put you in a position where we reinforce the relationship, add value, and go deeper with the client. So that's kind of what we're all about. It's a two-pronged attack. Yes, we want to get very granular on policy reviews, but this is also a process of how to talk to your clients in general to stay in touch with what matters to them. So we're going to hit on 3 things. We're going to specifically get into the client review. What are the components in it? What's the process? We're going to give you 2 or 3 examples of what you may encounter out in the field as you're talking to clients. And I'll also give you some real world examples of some things I've seen. And then at the end, we're going to be very specific about how you can incorporate this into your process. And those are going to be those action steps that if you want to do this, we'll tell you what to say, we'll tell you what the resources and what the support is. So I think some of you may have received a document that was sent out. If you haven't had a chance to see it, we sent something out this morning. We'll get it to you after the call. We have a document that is entitled Life Events Checklist. Have your needs changed? I would encourage you to take a look at this after the call. It's a number of reasons that during clients' lifetime things change. I would also encourage you, as we're going through the call, if you think of any clients or prospects' names, jot them down as people we want to go back to. All right, so let's look at the client review process. I mean, here are some very common life-changing or life events. I would say any client or prospect that you have is someone to go back to or go to on a proactive basis and simply say, do you have life insurance? And a lot of people are going to say yes. A lot of people are going to say no. And we'll come back to that in a little bit on what you can do in each of those cases. But you see here some of these common life events. Change in marital status. People get married. People get divorced. When people hear, let's do a policy review, their knee-jerk reaction is they just think we're trying to sell them more. They just think we're trying to jack up their coverage. But truthfully, a policy review is a process to try to figure out what they have, is it performing properly, and we're also going to look at the amount of death benefit they have, because if the amount of death benefit they have is inappropriate, they might need less, not just more. So we're going to be approaching that with clients and prospects. So a new home or a new job may change your situations. You might have children, you might have grandchildren. Future planning, and we're going to come back to this a little bit, but think about future planning. You might have a client that got life insurance in their 20s and 30s. They've had the policy for 20 or 30 years, and now they're in their 50s and 60s. They bought the policy for one reason. Their needs may have dramatically changed. So a common theme we're going to keep coming back to is, why'd you buy the policy? Do you still need it for that reason? And also, life insurance today has significant living benefits. People buy life insurance as much today for the living features or the living benefits as they do for death benefit. So I have to be very clear, life insurance is for death benefit. It's for our loved ones, for protection, for all the reasons Matt said. But there are some very significant living benefits why people like to have life insurance today. So we're going to come back to that. And the last thing here is current policy performance. And it's beyond the scope of this call. If anybody would like to discuss the different kinds of insurance policies, client demographics, profiles, why do people buy different policies in general, we'd be happy to go through that with you. It's beyond what we have time for here. But permanent policies, policies that build cash value, will have a component of them in several instances where the performance of the policy is based on the savings or accumulation in the policy. So let's say that in English. Another way is if you have a variable policy, it's based on the separate accounts performing at a certain level. If you have a fixed account policy, it's based on the returns in the policy meeting expectations when the policy was sold. Because we've seen rates and market performance potentially quoted higher in past years to what's actually happened, we have policies that are performing poorer than was expected when clients purchased them. So a big component of the policy review process is looking at assets or looking at policies that may be underperforming and they're not going to deliver what those promises were the clients are expecting. So in brief, and I'm going to come back and really kind of hit this and tie it all together at the end, but the client review process, we talked about it, uncover the client's goals. Hey, what'd you buy the policy before? What did you buy the policy for before? Why do you still need it? Have your needs changed? And I'll give you some talking points at the end. In-force illustration, we're going to come back and tie that at the end, but what an in-force illustration basically is, it's a current reforecast of the policy's values. So oftentimes, I mean, there's two kinds of life insurance policies. They're term and there's permanent. Term is like your homeowners and auto. There's no cash value. There's no real moving parts. You pay your premium and your policy stays in force. If you die or have a claim, your beneficiary gets a check. Issues with term insurance really could just be an old policy might be more expensive than you could get, today if you're still healthy. A permanent policy, there might be a number of other things that we'll share with you, but getting an in-force illustration is how we quantify, is your policy doing poorly or is it doing great? Tailoring policy to meet customer needs, we're going to put you in a position where we're not just talking about death benefit. If you're sitting there with a client in the 50s, 60s, and 70s, the pure death benefit they needed when their kids were growing up, they might not need that. But if you think about it, what's on clients' minds today? I'm worried about long-term care. I don't know, I'm not sure what I want to do. I know traditional long-term care insurance is a good option, but it's really expensive. But what if I don't need it? I've wasted the money. So life insurance is playing a key role on living benefits like long-term care, chronic type needs. We're also seeing people use policies today for cash values and safety net downside protection. So we'll come back and talk about that. Beneficiary review, when you're talking with clients, it's critical to go through these documents and just run through who the beneficiaries are. One time I was sitting with a client and I said, by the way, I'm looking at this policy. I said, who's John Doe? And the person I was sitting with, their face got all red and they looked like they were about to jump over the table. And they said, well, that's my ex-spouse. And if something happened to me, I would have jumped out of the grave, and if that was paid out to that person. So ask the questions, beneficiaries, because old policies may be out of date, for those parties to the policies as well. We're going to come back to this towards the end, but you see here our considerations are poor performance, potentially lack of guarantees. On the positive side, living benefits, I touched on briefly, long-term care, chronic type of liquidity. We have cash values with downside protection and index products. And then we also have conversion features. Okay, the scenarios I'll walk you through here are if you have a policy. And the thing I'll come back, and again, when I tie it together, when we do a review for a client, if I were to say Kim's my client, I'd say, Kim, do you have life insurance? And Kim would say yes. I'd say, let's look at your policies. And Kim immediately is thinking, hey, I know you're just going to try to sell me something new. But really, our process is a very specific way to take your policy. We're going to review it. We're going to assess the type of policy it is. We're going to look at the performance with the in-force illustration. And there's 3 possible outcomes from your policy review. Your policy could be doing fantastic. It was sold with appropriate forecasting. It was sold with appropriate rate expectations. So it might be doing great. So the first scenario is we're going to say, Kim, your policy that you got 5, 6, 7 years ago is looking great. Keep it as is. Keep paying the premium. You're fantastic. The next example we might say is, you got this policy back around 1999, 2000. The market was going gangbusters. As an industry, we were selling variable policies at 10, 11, and 12%. Now, if anybody knows, the market has come back to all-time highs now after 2008, But some of those policies sold with very high expectations. The actual performance hasn't been what we thought it would be. So the second scenario in a policy review is a policy based on cash accumulations may be underperforming, and what that means, now to go back to tell me this in English, what it means is the policy may lapse at an earlier point in time. Average life expectancy for a single person is in the early 80s. Average life expectancy for a couple, second one to die, is in the early 90s. We're seeing policies at times that when we're doing the in-force illustration, we see a policy lapsing in the 60s and 70s, which really just means it's a high probability that the policy will not make it to the client's life expectancy. So scenario one is policy's doing great. Scenario two is your policy is doing very poorly. It's probably going to lapse before something happens to the insured, and you usually have to take corrective action, significant corrective action, to either replace it or put a lot more premium in. The third scenario is kind of in the middle. It's a review situation where we say, you know what, your policy is doing okay. It's working almost what we expected. The performance may not be exactly what you hoped. That could be due to illustrating higher rates of return than you actually received in the policy since it was issued. It may be that premium payments were made late. It may be that there was some loans taken out of the policy and some of the loans were paid back against cash value. So the thing we have to look at there is scenario three is policy's not too bad, but we need to do some adjusting to make it to rehabilitate it. So that's kind of the process there. So let me, before I get into a few of the examples of what are the kinds of situations you're going to see, let me pause for a second. You know, Matt, Kim, do you guys have anything you'd like to add?
I think you've covered most of it here so far, Steve.
Yeah, I think good.
Okay.
The question, another way to maybe present the client review or to ask them about the policy review, something that I've learned in the past. You know, if somebody's hesitant, you know, it's very possible. You know, if we could get you the same amount of coverage but for less money, or more coverage for the same amount of money, would you be open to that? So that's another way to position it. So, you know, you've hit it on the nose so far.
Okay, great. Thank you. Yeah, and I think, you know what, you said that very well, because it was one of the things I was leading to. But I think that's the core of when we do a review of a policy for a client. I mean, we may be able to either reduce what you pay for the coverage you have. We may be able to get you more coverage for the premium you're paying, but let's just make sure it's working right. So, hey, Matt, thanks for kind of summarizing that, because I was kind of getting there, but I don't think I said it as well as you just did. So that was great.
Yeah. And
my
Steve,
pleasure.
Another question you could ask your client too is, do you have the old life insurance or do you have the new life insurance? And as you mentioned, Steve, living benefits, they're just as important as death benefits now. And a lot of times, if you've got a policy that's, say, 7, 8 years old, they probably didn't have the living benefits on their policy. So.
And a majority of us, before we die, we will probably have spent some time in a nursing home or in a long-term care type of setting.
Exactly. Exactly.
Yeah. Kim, thank you. That's such a great point, because it's such an intriguing question. If you say to a client, do you have the old life insurance or the new life insurance? I mean, you're not trying to be cute, but they're probably going to say, well, what do you mean?
Yeah,
you know, and
exactly.
then you're opened up to a great conversation. And another thing, if any of you want to talk about long-term care planning, again, it's a level of detail beyond the context of what we wanted to do on this call. If any of you want to talk about the long-term care planning options, you know, I'd be happy to help, or the guys at URL can. What I'm driving at here is your options for long-term care coverage are traditional long-term care insurance. You know, we still sell that quite a bit as an industry, but we're selling a lot more life policies with riders. So, you know, that kind of plays into what we're going to be talking about when we wrap up. Life policies with riders is becoming an extremely popular way for clients to deal with and address the long-term care exposure, you know, for a number of reasons. So we still sell traditional long-term care. We sell a lot of life with riders for LTC. So if any of you have that as a specific area of interest, you know, just make some notes and, you know, we can follow up with you after.
Sounds good.
All right, great. Hey, why don't we do this? Let's jump into the next section. What I'd like to do is I'd like to walk you through the positioning and presenting section. Really just gives us 2 or 3 examples of client scenarios of what you may uncover So let me walk you through, and then we'll get into the process after. So the first example, and these are hypothetical case studies. They're designed to give you kind of a picture of what you may run into, and also the ways that policy reviews or the new policy solutions can help. So our first one is going to be, we've got a male age 57. He's in good health, preferred no smoke. He has a whole life policy that was acquired in 1981, $50,000 death benefit. He's paying $595 a year, got $15,300 of cash value, and the policy is guaranteed to cover, to continue and endow at age 100. Endow in our life insurance world is going to mean the cash value is guaranteed to equal the death benefit. So if any of you are like me, you've got a friend that was a fraternity brother that's a Northwestern Mutual agent, or we know these people, and you're going to run into clients when you say, hey, do you have policies? Yeah, I got this policy that my friend from college sold me. I've been paying for it forever. I don't know why I have it. I still have it. These are the kinds of things you're going to find. So what we're looking at here is, from the first perspective, lower cost. We're going to use the North American products to illustrate the point. But what I will stress to you guys is, we're one of the main carriers that we're honored to be part of URL's team. They have other really good companies, so we'll be one of the major players. But when you go to URL, Matt and Joey, the team, are going to shop the market and give you the best products, but we're going to be pretty strong, but you have the best of both worlds there. So to look at this example, let's look at this from a lower cost perspective. We see that first column where it says current whole life, $595 a year premium, $50,000 death benefit. The death benefit will be going up some because of the cash. But if we went to that client and said, hey, if we could either reduce your premium or get you more coverage, we'd be interested. The three policies we have there: custom guarantee. Think of that in terms of just a regular no lapse guarantee UL. No lapse guarantee UL is something we've been selling for 20 years in the industry. It's a guaranteed permanent policy with not a lot of cash. So in this case, we could do a 1035 exchange. 1035 is a code section of the Internal Revenue Service. It just means you can move money from one policy to another, assuming the parties are the same from the old to the new, and there's no tax consequence. So we could, in this situation, we could roll the $15,000 of cash to a new policy, and we could guarantee $50,000 of death benefit with no future premiums. So Mr. Client, if we could roll the cash over and guarantee your coverage and you never pay any more premiums, would that be helpful? Hey, it sounds like a good idea. If we use those other kinds of policies, there's custom guarantee, and what we're doing here. All right, I see. So what we're doing here is custom guarantee. It's a guaranteed IUL, and we're just showing that's the amount of money for $75,000 and $100,000 death benefit. So it's a dollar amount per thousand of coverage that you can reduce your price. So in a lot of cases, being realistic, when you're looking at clients, they're going to be saying, hey, can you keep my coverage the same and reduce my premium? We can do that here. But you see all those three examples are showing that we can either stop the premium payments or we can reduce the amount they pay per thousand of coverage. Okay, now what we're going to do is we're going to look at the same client and we're going to say more coverage for the same premium. So we have the same scenario, male 57. We've got that $50,000 whole life, $595 a year premium. If we were to take $595 a year and roll over the cash value, $15,300, to that guaranteed UL, we can guarantee the death benefit to $73,000. If we go into guaranteed builder, it's $70,000. Quick comment here, as a general category for life insurance, when you're looking at permanent life policies, and the guys at URL can help you with this, and so can we, that you're going to see the traditional no lapse guarantee universal life. It's a fixed product. You pay your premium. Your death benefit's guaranteed. There is little or no cash, but it's going to be something that's commonly used. Clients like it because it's easy to understand it. There's guarantees, so people are comfortable. The drawback with a traditional no lapse guarantee universal life is there's not a lot of flexibility. There's not much cash, so you really are kind of stuck with that product and you got to keep paying it. The guarantee builder, the last column on the right, is an IUL contract. It's an indexed universal life. It's a policy that kind of gives you the best of both worlds because it's going to give you all the full guarantees of the guaranteed UL. And it's also going to give you cash value. So you'll have some cash savings. You'll have the liquidity for long-term care type of service or chronic illness, but it costs just a little bit more. So I'm going to stop there. We can kind of go more in the weeds if you want to dig into the products. That's not really the purpose of the call. But please know, going forward now, there's a number of different kinds of permanent life contracts. And that's like when Kim said, do you have the old ones or the new ones? The new life policies give you downside protection on your cash value for growth. You get a reasonable return on the days the index goes up. You don't lose money on the down days. You have chronic illness liquidity for similar benefit triggers like you'd find on a long-term care policy, and you can still in many cases have full death benefit guarantee. So you see in these last couple pages, for this example, for this client, we can either dramatically reduce their premium or eliminate their premium, or we can get them more coverage for the same premium. And then the other big nugget is we're going from a prior older product from 1981 there really was just some death benefit and cash, and we're adding liquidity for long-term care types of services in addition to a more efficient product. All right, the next thing I'd like to show you is an example where we're probably going to get into, we see here enhanced policy performance. Think in terms here of a policy that was purchased several years ago that may have been presented to the client at the time by a different agent. They were honest, ethical, well-intentioned at the time, but their projections of the policy performance were overly optimistic, and it just hasn't happened. So what we have here is we have that situation where now the accumulated value in the policy and the duration of the coverage isn't going to last as long as we had hoped. So another way to look at this is, to give you an example, if you were going to drive your car from Boston to New York, if you could make it on 1 tank gas, if you got 20 miles per gallon, you'd get there. If you only got 15 miles per gallon, your car would run out of gas somewhere around New Haven or halfway there. So it's a way to illustrate the point that in a permanent life policy, often the policy going the duration of what you wanted it to is based on the efficiency of the cash being performing in the policy. So if the performance of the policy is underperforming, we sold a variable policy where the market expectations outpaced what actually happened. We have a fixed policy where interest rates were lower than what we expected. Policy values are going to be less. So we have here an example of, we've got a male age 47, healthy, super preferred, non-tobacco, has an existing UL with performance issues. And I'll quantify that for you in a second. $250,000 death benefit, $1,500 annual premium, and $17,500 of cash value. Let me give you an example. This is one that I probably saw about 10, 12 years ago. This is what you're going to run into. It was a situation where it was a business-sponsored case. There was a small to medium-sized business. They had the key, the franchise person, the rainmaker sales guy, and he was key to the company's performance. They provided him with a highly funded policy, a variable policy that was going to be his supplemental retirement income. Sounded great. The projections when he bought the policy 20 years ago, where he would put in this much money, the company would participate in the premium payments, and at retirement, he would be pulling out thousands of dollars of retirement income. 20 years later, we did an in-force illustration, and unfortunately, the policy was underperforming based on the actual separate accounts, or mutual funds in a life policy is called separate accounts, so they're kind of the same, but they're technically called separate accounts in a life policy. The actual performance was a lot less. So in the case of this executive, his thousands of dollars of retirement income was only a few hundred. So you're going to see policies where the future cash values aren't going to be as good. You're going to see policies where the death benefit isn't going to make it as far as we want. So let's look at this example here. We have that policy, and let's just assume it was some kind of a variable or some kind of an interest rate sensitive policy. The client, we see the current policy, $1,500 a year, $250,000 death benefit, cash value of $17,500. in a lot of these situations, the 17.5 will actually be eroded and will actually diminish to a point where you'll have less cash or even no cash. So when a policy is designed in part for accumulation and income or distributions, we've got to be mindful of poor performance because that future cash value just may not be there. The scenario you can pivot to is we've got a policy at North American. It's an indexed universal life. It's called Rapid Builder. It is a policy that's designed to accumulate significant cash in addition to providing a death benefit for the client. You know, North American is one of many good companies that have those. This is the one to illustrate the point. You know, URL is going to have several of these, but this is one of the good ones. So you see here what we did was we kept the premium the same, kept the death benefit the same. Because the efficiency of the new policy is superior, we're able to show a reverse of the trend and now rebuild the cash value. So in cases like here where the goal was maybe a business case or a savings case, supplemental retirement income case, we can take a policy where the cash value is dwindling and going away to a situation where we can restore the benefits to the client and the cash value will start to grow. Okay, things to consider, and we'll just make a couple of comments here. And I would say that these are things that when you have specific cases, we can look at them with you. Access to cash value in 1035. We can move the money over from an old policy to a new policy without creating a taxable event. If you have any questions there, come to the guys at URL or come to us. We can guide you there. When you go to a new policy, the second bullet point here, new surrender charges. Oftentimes, a life policy is going to have a period of surrender charges where it costs you part of your money to take money out or surrender the policy, usually between 10 and 15 years. After a 10 to 15 year period, the old money is fully liquid, or the old policy is fully liquid. You can take money out with no charge. When you go into a new product, you could potentially have new surrender charges. There is a product that we have which will waive those. And that's, again, beyond the context of this conversation, but we just want to make sure that we're talking about access to the money. And if the client wants money sooner, we may think maybe we shouldn't reposition policy, or maybe we just want to be careful how we design a new solution. Okay, change of health. You could have a client that may have gotten better. Maybe they stopped smoking. Maybe they lost weight. Maybe they got their cholesterol under control or their blood pressure under control. It's not uncommon to see people's health get better, and therefore we can get someone a more favorable rating class. And then living benefits, we talked a little bit about, getting the new versus old style of policy is a very common theme for why people want to consider something new. All right. I want to start to bring us into the home stretch and maybe get into some tools of how you can do this and maybe put our action plan out there. So again, let me pause and Matt, Kim, what have I missed? You guys made some great comments before.
I think you're doing well, Steve. Like you said, I think we're ready to take it home and apply this and come up with your clients and a game plan.
Okay, awesome. Well, thank you. All right, guys. Hey, the last few slides, what I'd like to do is highlight some resources that are available and then give you maybe the sales track of how the conversation could go to uncover these. So we have a chart. You really can't see the numbers here. It's kind of hard to read. It's an income replacement grid. Something that I also missed or didn't say is when you're talking to clients about their policies, do you have them? When did you buy them? What did you buy them for? Do you still have that same need? Another question which we can help you with off the call is to ask a simple question. How did you come up with the amount of coverage you have? Most people are going to say, well, I just picked a number. It felt like a big number. The thing you want to ask is, has anybody ever taken the time to calculate the right amount of coverage for you? And I guarantee you 9 out of 10 people are going to say no. We can help you with a simple way to calculate how much death benefit somebody needs. We can give you a detailed way to do it if you have an engineer for a client. But this grid here is something we can make available to you after the call. And in essence, what it basically says is it shows you the lump sum needed to drive the income on the horizontal axis, actually the vertical axis, sorry. The numbers on the vertical axis is income per month. The numbers across the top is number of years. and it gives you the number of dollars that you need, so we can get you this tool after. Okay. We were touching on, I would say, these are some of the reasons that we want to be talking with clients. We kind of hit this in the beginning. Social media tools. It's a bit off topic here, but what I would also like to add is just a quick comment. If any of the participants on the call are interested in taking your social media footprint, your social media presence to a higher level, let us know and either get in touch with Matt or give Kim or me a call or email. We have an entire section on our marketing page dedicated just to social media. We also have a tool set up where you can plug it into your LinkedIn account, for example, and set up automated content feed based on any type of industry subject you like. So if social media is an area you'd like to expand your footprint, let us know. We can point you towards the right tools. And it's not product or company. It's just social media stuff, which is kind of cool. Okay, we've also got some YouTube videos. I don't use them too often, but they're there. It's kind of a nice way to help tell the story. There's some things in there you may want to reference. Okay.
Now, I'll tell you, Steve, those YouTube videos are perfect. If anyone has access to Wi-Fi, this is a great way to have a professionally done presentation that explains how index universal life policies work, or how to leave a legacy to your family. These are all things that it's not your words, it's professionally done, and it's available to you through your relationship with us and with North American. So I highly recommend it. If any of you go, if people go to your office, or if you make any house calls or whatever, if you have access to Wi-Fi, these YouTube videos are perfect to have on your laptop or your iPad, that you can play these videos to show your clients. And it just does a great job of sending the message home.
Awesome. Thank you. On here, and I don't know if my pointer for my mouse is coming across, but if you can see this, this is the actual marketing site we have. I'd recommend you to, Matt, we'll put together just a brief summary with some bullet points and maybe this link, and we can send it to you. You can forward it to the participants. On the marketing site, you see here where it says sales concepts. If you hover over sales concepts, it will drop down and you'll see client review. There are several pieces that are available, which is reinforcing some of the things we're talking about today. It's more sales concept. There's not as much product in there, but it'll teach you how to run down this track. There's materials for the producers on the call. We also have some select pieces that are client approved that you can share with your clients and prospects to help you tell the story. Over here,
we actually
on
have a link on our website, Steve, and sorry to interrupt you. We have a link on our website that links our producers through our website to this site. So we have that available, and we're going to be redoing our website, and that stuff's going to be included in there as well. So yeah, it's available right through our marketing materials under Life Markets. So if anyone has any questions on how to navigate our website and where to find it on our website, I'll be happy to take a couple seconds to show you where you can obtain the marketing materials through our website, so you don't have to keep searching all over the place.
That's a great idea. Thank you. And and I'm starting to get close to being done. So if we've got some time at the end, I'll yield that time back to you if you want to show it, or you can follow up at a different venue after.
Okay.
Okay, great. So here's an example of some of the materials you can get off that site. You see the piece in the middle it's a client guide. There's tools there that you can share with clients and prospects. And then I guess just the last thing I want to share with you guys is kind of the next steps. If you think this is something you'd like to pursue, first I would say, come to us with any questions. But what I just want to do is I want to wrap up with what the process is, what you can say, how you can use us for support. So to kind of tie it all together, I would, we say here, in the next steps, identify 3 clients. I would say, can you find 5 clients? We're going to help you with what to say, and the end is going to be come back to the guys at URL. You can certainly call us. You can call me with questions, but the process is very simple. And what I would say is, if I would say Kim is my client, I would say, Kim, do you have life insurance? And Kim is probably going to say yes, or she's going to say no. So if Kim says yes, I'm going to say, great. When did you buy the policy? I bought the policy 11 years ago. Has the agent or the person that sold it to you ever come back and done a review since then? Most of the time, they're going to say no. So what you want to do there is you want to go down the path of, hey, you know what? It's really important we take a look at these. Get me a copy of your annual statement and let us take a look at this for you. Now, I'll share with you, we don't really want the policy. The annual statement will suffice in most times because it gives us all the information. If we can see when the policy was issued, the kind of policy it is, it'll give us the current values, the premium, the death benefit. If we see the statement, we're going to have a pretty good idea of how it's doing. You can also get a photocopy of the policy deck page, but after that, all the the boilerplate pages of the policy really don't help us that much. So if the client says, no, I don't have insurance, then you can choose to either disengage the conversation, or you can say, look, if you think you need to, let's calculate the right amount of insurance for you. You guys can take that one where you want, or you can kind of go to the next subject. If somebody says, yes, I have insurance, and if they probably have had it for less than 5 years, it's probably okay still. Policy's 11 years old. Get us a copy of the statement, and then what you can do is you can scan it to us, you can fax it to us, and then we'll give you some guidance. If you'd like, you can get the in-force illustration, or you can you can send us the statement first. Now let me give you just a comment on the in-force illustration. So we've got a client that bought a policy 11 years ago. They sent you a copy of their last annual statement. We see the policy. It was a variable policy. It was an index policy. It might have been a guaranteed policy, but we don't know if they paid their premiums on time. So we have reason to be not concerned, but we'd like to be cautious and see how this policy is really doing. What we're going to then do is we're going to have the client call their insurance carrier and ask for an in-force illustration. You'll also hear the term reproposal, but an in-force illustration, and you might want to be more specific and say, have the client ask for an as-is in-force illustration. That will give you the current policy performance based on the current cash value, the premiums that have been paid, and it will project out how the policy will perform going forward. It's going to substantiate that the policy is doing fine, or it's going to reinforce that the policy is not going to make it to life expectancy, and we could have some potential problems. So when I instruct advisors and clients to get an in-force illustration, I usually have them get two. I say, have your client call the insurance company, get an as-is in-force illustration. If the in-force illustration is not carrying coverage to policy maturity, that could be 100 for older policies, it could be 121 for newer policies. If the current as-is illustration is not showing coverage being maintained to contract maturity, run a second in-force illustration solving for a new, probably higher, premium to carry the coverage to maturity. That's the foundation of the baseline you need for analysis of whether you have something better for the client. So remember, we're going to go back and say, hey, policy looks good. We're going to say policy, not doing too poorly. We just need to rehabilitate a little bit, a couple around the edges, and we'll be fine. If you have a real substantial underperformer, then we want to, if they're healthy, we want to sell them something new just for defensive reasons. You want to have the in-force illustration that you can put side by side to what you have, because most of the time, the new illustration you get from the guys at URL is going to represent a better consumer value than rehabilitating a poor performing old policy. So that also governs the suitability review, because somebody might say, well, why didn't you just fix the old policy? And we'd say, because the client was healthy, we were able to get them a newer policy, lower premiums, newer living benefits, and then you're in a very tight situation. So that's really what it is. You want to talk to the clients, ask them if they have policies, revisit the death benefit need if you choose to, get this statement to us or the guys at URL, and we're probably in most cases going to advise you to get that in-force illustration. After that, we can quantify very clearly if a new policy is better. The guys at URL can help you with carrier and policy and case design selection. And really, we can help put you in a position where we're going to add value to the clients. We may or may not sell a policy all the time, but we're going to reinforce your role. And that's really one of the big things we're looking to do. So again, let me pause there, guys. We're tying this together. What do you want to add there? What have I missed?
Well, I think to summarize what you're saying is that in everything that we're doing, we're providing the client peace of mind. Either we can do something that's going to give them better value for their premium dollar, or the peace of mind. So that's one part of the peace of mind. The other peace of mind is giving them the peace of mind knowing that what they currently have is the best product that meets their needs of today.
That's exactly it. So, guys, I think we're about a wrap here. Kim, do you have anything you'd like to add?
I think you've covered it well, Steve.
Okay, great. Well, hey, Matt, let me just wrap up. Quick comment. I'll turn it back over to you. But everybody, thank you very much for joining. I'm thrilled, and Kim and I are thrilled to have been able to spend part of your morning with you. You are in the company of one of the best agencies that we work with URL. You see here that they span way beyond being able to provide you excellent products and things like this. They're truly experts in the business. If you're intrigued with doing or incorporating policy review into your client and prospect relationships, give the guys a call. They can walk you through it. And if you want to call me, I welcome that too. You can consider me part of the URL team, but these guys are great. So thanks, Matt.
Thank you, Steve. We've partnered with we've partnered with North American for our partnership. That goes back several years, and they provide the best service of any carrier. This is not because North American's doing this webinar. I would tell any agent that calls us who's my favorite company when it comes to service for both the client and for an agent. And North American is who is the benchmark when it comes to service, and their products are very, very good as well. A couple of things here. I'm going to take over the screen here, Steve. I wanted to show everybody on our website. I'm not sure if you can. Let me see here. Make sure you can. Everything's running slow here. There we go. One of the things under the resources for our producers, when you go to our website at urlinsgroup.com, when you log in again, if you don't have a current login, feel free to use our temporary username and password. Future is the username in lowercase letters. Partner is the password. If you go to Agent Resources, you'll see a drop-down menu. Go to Marketing Tools. And then you'll see that there's Life Markets Marketing Tools. And you'll go right to North American Marketing Materials. And there you have it. This will get you into different sales concepts, products, the various web events, social media. It is all right there at your fingertips. So I know we've covered quite a bit of information here. So I just want to put my contact information up on the screen so that if any questions pop up throughout the week, whatever we can do to help you, help your clients, we stand at the ready for you. So you have access to me, Steve Clemens, Joey Fry. We're your marketers. We are dedicated to helping you promote and help you market life insurance. Your case managers, they're the ones that are, once you've taken an application, they're going to help process that and get that going so that you have coverage in force, so that not only does your client have the policy that they want, but you also get paid rather rapidly as well. So feel free to give us a call. Our toll-free number is 800-WANT-URL. It's 800-926-8875. And again, you can visit us on the website at urlinsgroup.com. So I'm going to wrap it up here today. Thank you very much, everybody, for taking time out of your day to join us for our very first part of our Life Insurance Awareness Month series. A lot of information to digest. Another thing I just want to point out, that checklist that Steve mentioned earlier in the call, I will be sending out an email that will have that attachment in there so that you have the client checklist. So you'll have that at your fingertips as well. So thank you very much again. Steve and Kim, thank you very much for your time. We always appreciate the presentations that you do for us, and we look forward to helping everybody on their next life case. Have a great day, everybody.